Ooh, that stock market crashed. I tell you what, that's pretty scary, huh? Yeah, I know it's scary when the stock market crashes. It's scary to me too, but let's remember one thing, okay? Don't panic. Don't panic sell. Today I'm going to talk about 3 simple strategies that I use personally that get me through a stock market crash. And this is not one of the steps, but the first thing to remember is don't panic, okay? Don't panic sell. Don't just do a knee-jerk reaction on a stock market crash, okay? The stock market has crashed before. It will crash again. I've been there through the 2000 tech wreck crash, through the 2008 housing crash, through this recent 2020 pandemic crash, and now we're going through another crash. I don't know if you call it crash or recession or hiccup or whatever, but you know, when the NASDAQ goes down over 10%, when the S&P 500 goes down more than 10%, you know, it's a correction or crash, whatever you want to call it. We're going to call it a crash just to call it something, okay? But I've been there before. If you're young and you've never been through this, it is scary. And if you're old and you've been through this, it's still scary. I understand. But remember, okay, long-term investing, you're going to run into stuff like this, okay? So the 3 things that we need to talk about. So first, you got to know why it crashed. Right? Why is the market going down? Why is the stock market going down? Why are all these stocks going down, right? And this isn't even part of the 3 steps, but let's first understand. I guess I should add 4 steps, but let's understand that we need to know why. Why is this happening? Okay, so like I said, in 2000 it's because tech bubble burst, right? In 2008 because the housing crisis, you know. And then 2020 is because the pandemic scared everybody. We couldn't go out and do anything, right? Companies were closed down, right? I mean, that kind of thing. In this particular crash here, it's inflation, right? The big deal is inflation, right? You go to the store now, you're buying stuff. You know, I used to say, hey, honey, you know, I've got $100 worth of groceries and I can't carry the bag. You know, now I'm like, oh, I'm getting stronger because now $100 worth of groceries I can like easily lift. Nah, man, it's inflation, dude. Inflation is the prices that you see going up, right? Obviously, inflation is a big concern. Rising prices, pandemic fear still exists. A big one now, probably one of the biggest reasons for this particular crash, rising interest rates, right? Rising interest rates to stocks is like, you know, gravity, you know, to people, right? It'll bring you down, right? So rising interest rates. So what are you going to do, right? Here we get into the 3 simple. We did the background, okay? Because I'm glad you guys are still with me. So the 3 simple strategies, right? Number 1, find great buying opportunities based on value. Remember the old adage, buy low, right? Oh, but first of all, let me give you the disclaimer. I'm not a financial advisor. I'm just telling you what I'm doing, okay? And what might be able to help you. Why should you just listen to me? You shouldn't. Don't listen to some random guy on the internet, but do your own research, do your own due diligence, and see if these things that I'm doing make sense to you. Okay, so the 3 simple strategies. Find great buying opportunities in stocks in quality companies that you already own. Buy more of your holding, you know, it's at a lower price, so what we're doing here, what we're talking about here really is dollar cost averaging, right? So buy on the dips, buy on the crash, buy on the recession, whatever. If they're quality companies, right, the companies that make money, that sell a real product or service. And of course, this applies to new positions, right? You can buy new positions that are at a deep discount, right? If you go to the store and you get a 10% discount on something, that on your food, you're very happy, right? You're going to buy it. Same situation here, and it's hard. It's a mental thing, right? Oh man, I'm losing all this money right now in the stock market. But remember, you don't lose until you sell. So during times of high interest rates, typically banks will benefit because they can charge more interest, right? Banks that I picked up recently, Citi, Discover, Capital One. So credit card companies, they're going to charge more interest rate when the interest rates go up. Banking, that type of thing. And they're at great valuations. The price to earnings below 10 at the time of this recording, and they're making money. Right, of course, we know they're making money. They're making money off us, so might as well tap into that. Quality stocks, not the high flyers, right? Not companies that don't sell anything. Not companies that have future sales, right? Companies right now that are making money, that are solid, that are strong, right? The companies that you may own, that you put more money into, and when they go up, when you buy low now, you will reap those benefits later. Dollar cost average, number one, as well as buying value stocks at a discount. Okay, that's number one. Number two, okay, if you're not doing individual stocks and you're like, oh man, I'm freaking out, fine. I would suggest buy into quality ETFs, exchange traded funds, simple as something like the S&P 500, right? The top 500 companies of America, come on, right? We're going to bounce back, right? Do you believe that the top 500 companies of America is going to bounce back? If the answer is yes, then you're buying these 500 companies at a discounted price because the S&P 500 crashed pretty hard. So ETFs like VOO or SPY, right? SPY has higher management fees, so I would suggest VOO. So I'm buying VOO. I bought some of that at the discounted price. So ETFs, okay, so number two. Quality ETFs, not crazy stuff like the high-flying ETFs that don't have a price to earnings or anything like that. Quality companies, quality ETFs. So number three is diversify into different asset classes. All right, so you got a lot of money in stocks, perhaps real estate. I know there's a higher barrier of entry into real estate, so perhaps not, maybe some REITs or something like that. The second thing is a lot of people hedge against inflation. A lot of people buy gold. You can buy gold, go out and buy physical gold, gold bullion. You can or you can't. You have to keep it in the safe. You pay companies to keep it. You have to pay extra charges. But you can also buy a trust like GLD, which tracks according to the price of gold. So if you want to buy a trust that you can just simply click on your brokerage account, GLD, or you can go into gold mining companies like GOLD, which is Barrick Gold. A lot of people buy that. I'm not doing either one of those, but a lot of people do. So a lot of people see it as a store of value, especially older guys like me. What I'm doing is buying a stable coin. Now, don't freak out. Don't think I'm buying Bitcoin or anything like that. Crazy. No. I'm buying a stable coin backed by real gold. You buy this stable coin and you get real gold, okay? I'll leave a link in the description below to the Gemini platform. The stable coin is Paxg, P-A-X-G. In this stable coin, it's 1-for-1, right? The exact same price as physical gold, right? And it's backed by physical gold. I did the research, and you do it too. When you go look on Gemini, click the link, you'll get some free crypto, whatever, if you use my link. You get $10 in Bitcoin, I get $10 in Bitcoin, whatever, is 1-for-1 backed by real gold, okay? So it's 1-for-1, and you can do the research where they keep it. They keep it under lock and key in a secured area, okay? So it's 1-for-1 gold. As a bonus, guess what? What you don't get with gold, physical gold, or the ETFs, or the trust, or anything like that, is you actually earn interest on the gold that you're holding through the stablecoin. It's not much. It's like 1 point something, 1.5, I think, at the time of this video, something like that. But, okay, my point is, you can buy gold without having to physically go out and buy the gold. And what you're buying is real gold, and you can get a certificate. So it costs, whatever the price of gold will cost, right? So you can actually see the certificate of the gold that you own. How real is that? Okay, so, and like I said, do your own due diligence. I'll leave all the links in the description below. So I'm buying the Paxg gold. That's what I'm doing. A little bit of that. I am dollar cost investing in the stocks and ETFs that I currently own, as well as what I'm doing is I'm buying stablecoin for Gemini as well, GUSD. So the benefits of that, it's not like Bitcoin or anything. The value of that is backed by US dollars, backed by real money, by our money, right? By US dollars, right? So 1-for-1, it will never go up, it will never go down. It's $1 for $1. So you go and you buy $100 worth of GUSD and you get $1. But here's the reason why you stay. The reason why you stay to the end is because for GUSD, from Gemini only, not from any other brokerage, okay, not from any other crypto provider or anything like that. From Gemini only, the advantage is that you're going to get over a slight over, I think it's 8.02% interest, okay? Not compounded yearly, not compounded monthly. Guess what? Compounded daily, just like credit card companies are doing, right? So 8% stable return. Do you want an 8% stable return right now? I do. Stable return backed by the US dollar, okay? I mean, that's important, right? This isn't just some crypto thing that has no intrinsic value or anything. This is backed by the US dollar, okay? So you're not going to get price fluctuations or anything. Click the link in the description below to go to Gemini, and if you buy this GUSD through Gemini, through my link, you get $10 in Bitcoin. I mean, free Bitcoin, whatever. Let's talk about Bitcoin or cryptocurrencies just for a second, because a lot of people will say, you need to buy crypto, you need to buy Bitcoin, you need to buy Ethereum when the market goes down. Guess what? Those guys are going down worse than the market. Tell me that crypto prices aren't correlated to the stock market. Let's look and see what just happened here. So that's baloney, pure baloney. As a matter of fact, the Bitcoin and crypto prices have fallen way more than the stock market. Okay, don't give me that. Now you're saying, oh, well, now you're being contradictory. No, I'm not. You're saying, well, why wouldn't you double down on your Bitcoin, and dollar cost average your Bitcoin? You can do that, but let me tell you the difference. There is no real value. There is no, okay, I'm not going to say no real. Well, maybe no real. One cannot calculate the intrinsic value of Bitcoin or Ethereum. It does not produce anything, right? And it's different from gold because gold, you can actually do stuff with it, right? You use it in computers and jewelry, whatever. But Bitcoin, once the fad goes away, once people stop getting interested in it, what's going to happen? What's the real value? You own this thing. What does it produce? I don't know. Leave me a comment, argue with me, okay, please. I would like to enhance my knowledge. But disclaimer, yes, I do own some Bitcoin. Yes, I do own Ethereum. I do own some Solana, okay? So I'm not a crypto hater or anything, but I do understand that it could go to zero. All of it. This is kind of a tangent, but only invest in crypto what you can lose. So my whole portfolio in crypto is only 2%. And I put $100 in investments, real estate, stocks, gold, whatever, right? And $2 get wiped out because I own crypto. Dude, I'm okay. I'm alright, right? 2% for me is good. Whatever percent you're comfortable with, fine, buy it. But what I'm saying is, don't put all your money into crypto. I am not and would not ever put a big percentage of my money into crypto, ever. I don't put all my money into one asset class. 20% max per asset class, 5% max per holding. I'm treating crypto as a holding, so I will never go above 5%. Because see what happened now, right? And the whole problem is the intrinsic value problem for me. But leave a comment below. Tell me, hit that like button, man. Tell me if this has been valuable to you. Leave a comment below on why I'm right, why I'm wrong, what you're doing, especially what you're doing in this market crash. Hopefully it's not panic selling, right? That's where people make the money, right? That's where we make the money when everyone else panic sells. We scoop it up. We scoop up the stocks, the companies. Because remember, stocks are real companies, right? What you're buying is not a piece of paper. What you're buying is a slice of a real company, right, in stocks, not in the crypto, So let me know what you guys think. I'll leave a link in the description below for all the gold stuff and the stablecoin stuff. So please subscribe to my channel if you've got value for what you've heard, and leave a comment and I'll answer. I'll try to do my best to answer, and let's start a good discussion. So if you haven't gone to my website already, check out my website at hustlenation.org, where we talk about personal finance, investing, career advice, and personal finance, all the good stuff, right?
hit up the website hustlenation.org and sign up for the newsletter where you get all the tips and tricks and all the inside scoops. So see you there. Thanks a lot for watching. Really appreciate it, guys. Peace out. Happy investing.